Okay, all right. Welcome, everybody. Good morning. Thanks for joining us on Friday. Happy Friday. I am Kaustav Chaudhary. You can call me Casey. I'm founder and entrepreneur in residence at Pitch Global. We at Pitch Global and predecessor companies have run mentoring and investor events in Silicon Valley, LA, other places for almost a decade. And last few years, we have been a satellite of US government program for mentoring entrepreneurs. And this last calendar year, entrepreneurs we have mentored have raised almost $50 million. And US government program is encouraging us to reach out more to CVCs, which is corporate venture capital arm of large events. And over the last 1.5 years, we have really made a lot of connections and thought leadership events with CVCs because that's where the market is moving. And there is the latest CB Inside report, which says this year, the first 6 months of this year, funding has been already 97% of total CVC funding of last year. And we want to stay ahead of the curve. And now we are also launching Pitch Global CVC Accelerator with backing from US government program. So today we are really excited to have brought together a group of people. Collectively, the nature of education, which will come out today in 2 hours, I'm very confident is the highest one can ever get anywhere. Very briefly, I love philosophy. I love looking at deeper reality, and what is happening with knowledge and education in Silicon Valley is that change is happening so fast here. Anything on knowledge becomes knowledge or education when experts say, yeah, this is knowledge, and it is published officially. But in Silicon Valley, by the time something is anointed as knowledge, it is already changed. So like CNN says they are breaking news, we at Pitch Global want to be breaking education. And we are very thankful that we can attract the people who collectively can create the best breaking education in the world. So on that note, I'm going to first start this event by welcoming our sponsor, Sharon Sim of SKC's PR. Now, we also want to share how people and we are connected with one another because that's also part of the ecosystem building. I personally did a lot of philanthropic work and with large events for Leukemia Society because I was on the local board for 7 years in San Francisco. And there was like a lot of huge events and galas, and that really got me interested in events. And the last time I did mentoring, I was mentor of Emmy Award winner, Latino media icon, Victoria D'Alba. And Sharon is Victoria's friend for a long time. And she came up from LA a couple of times for some of those events. And that's how we met. And then Sharon really helped us in LA. She brought senior editors of TechCrunch, USA Today, all these people to our events in LA. So she also advises government of Taiwan for their startup initiative. She advises a couple of very big investors for a long time. And last but not the least, she sold her previous PR tech company to top 10 PR company in US. So Sharon also has been a huge mentor and supporter. And she interviewed me at LA Tribune Gala earlier this year, just before Kevin Harrington of Shark Tank. So Sharon, can't thank you enough. So floor is yours.
Thank you for the kind introduction, Casey. I think all of us, I've worked with Casey for probably, 5 years now, and have seen him grow Pitch Global by leaps and bounds, have seen him help a lot of startups. And this is a free event for all of you here today. So make full use of it. There's some really amazing speakers, cream of the crop here to really provide knowledge as you seek funding and seek partnerships. So this is a great opportunity for everyone. I'm very glad to be part of this. So I think we're going to pass the time on to the first entrepreneur perspective, Ross Jones, shortly. But before that, if I can share with you my screen, I will share a quick case study. Actually, before that, I'll just share with you today's agenda very quickly. So Casey did the opening intros. I'll do a short case study about a client that maybe will help lend some perspective for you as you go about growing your startups. Then Ross Jones from Cargo Chief will talk about his funding success. Then we'll be followed by a presentation by Andrew Maywell of Tdk. Q&A session. So just be thinking about questions you can ask as well as you go through the presentations. This is a great chance for you to have access to these high-powered VCs, CVCs. And then also, of course, the SK Group. Everyone knows about the SK Group. It's a huge conglomerate. And we are very lucky to have Hee Seok Chung to be with us today as well. So that's kind of a 2-hour program for everyone. So hope we can make the best of it. And yeah, anything
Sharon,
else you want to add?
Yeah, one last thing. Why don't you also, people like experiences, and because we had such positive experience with you, why don't you briefly tell them how you brought senior editor of TechCrunch to our event, so that they also start thinking how they can attract such people to their ecosystems too. Maybe start with that.
Excellent. Yeah, that's a great segue. So I've been doing PR my entire professional life. So I'm kind of old now, so probably more than 20 years I've been doing this. So over time, we've developed really good relationships with the media. They're always looking for a good story. They want to break news. They want a scoop. And how does your company contribute to larger trends that are going on out there? And it's important to engage with the media because all the VCs you want to reach out to, they're reading TechCrunch, they're reading USA Today, Wall Street Journal, Inc. magazine. So the more you can be out there, it can really catapult your success in more ways than you can imagine. So that's a really good segue to a little startup success story I'm going to share with you. It's an exit. So when this company is a company called Trustgo. Erin, can you admit? Okay, thank you. So there's a company called Trustgo that came to us with really not much. It was a very young company, only a few months old. They have much bigger competitors in the market. And they were like, hey, please help us with getting more users on our app. They do a security app, mainly for the Android phones. And this was at a time when Android platform was the Wild Wild West. And anyone who can program something can put an app out and nobody knows how dangerous or not dangerous it was. So Trustgo came up with this method to really control or just kind of keep track of what's dangerous and what's risky. So, so we devised this really comprehensive PR program where we help not just drive user download. Driving user download is a direct approach. But if you can get traction and press coverage and excitement about why you should do this, then people would really go to the app and want to download it. So one of the things we did was creating all types of reports because they have access to data that shows, oh, this is the safest marketplace or this is the most dangerous apps to do download. So we would basically put together this really attractive mobile mayhem report maybe during every quarter, and then for this quarter it was really good. We call it the Halloween Mayhem Report. Then we pitch it to the media who just kind of play it up. With all of that, we got a lot of traction, including potential acquirers that didn't even know that they exist, because we were ranking which were the safest marketplace from Amazon to Google Play and all that stuff. And they got interest from Amazon who wanted to talk to them and all that stuff. And then they also had very interesting features with the app that we kind of play up. For example, if somebody tries to log into your phone and they enter the password wrong 3 times, it will take a picture of you and send it to the actual owner. You know, if you stole the if you stole the app, if you stole the phone. So that kind of created, so we pitched it to the media, which kind of had a field day playing with that. So we got more press coverage. So just more and more buzz that created more and more people to drive to download the app. So over time, we got some really great press coverage, a lot of buzz. And then the acquirers started coming. And ultimately, I think within 1.5 years, they were approached by multiple potential acquirers and they became part of Baidu, and Baidu became our client. So this is a great success story and hopefully something you can aspire to for your own companies. And then I think that's all I have to say. Plus, just for friends of Pitch Global and SKC, we also have a VIP relationship with Business Wire. So we get really very good discount with distribution of press releases, and we can also offer you a complimentary consultation. So you get our VIP discount if you mention Pitch Global. That's it. And you can contact us at SKC or at my email, sharon@skc-pr.com. Erin will put it in the chat.
That's great, at Sharon. And because I like life, and impromptu. So I got to ask make a comment,
Okay.
because you tried to get us one press coverage with one of the largest TV channels in the world, and they turned us down beginning of last year because they said there's nothing unique what you guys do. And then when the pandemic hit, they are the ones who came and said, wow, we are looking for companies who have managed to move online. So that upbeat message, even if rejection can lead to success later. I think
exactly. That's a really good point. And by that time, we were writing onto a trend story the reporter was writing about, and Casey got featured left and right in that a big national. No, it's actually an international media. It's called CGTN. So they beam all over the US plus China, English language.
They're the largest Chinese TV channel.
Exactly.
All right. That was very illuminating. So Sharon, thanks very much. Now we are going on to the main course, and Megan from Trinet says hello too. But we are just getting on signing paperwork, so she's busy with training. But so now it's my pleasure to interview or ask some leading questions to someone I know very well over the years. And what I was, really excited about him, because he's someone who really exemplifies the Silicon Valley mindset. People talk a lot about mindset, but just talking about mindset doesn't create mindset. Mindset is what mindset does. So on very rare occasions, if you see someone displaying a positive mindset, then we can try to understand the person's inner experience and what created that mindset. That's the only way we can learn about mindset. And this gentleman, he is in related to trucking tech industry. And in our event, he met this other company, even though both of them went to Harvard, but they met at our event. And he became an advisor investor in the second company, Telemetric. And someone else could have looked at Telemetric as potential competition, whereas that was looking at things as glass half empty, whereas this gentleman looked at it as glass half full and said, hey, why not? Maybe they'll become an extended channel. And now Telemetric is working with IBM, all these people, Mars, and maybe they will come to this company too because of the association. So I just wanted to give that background. And it's my pleasure and privilege to introduce Russ Jones of Cargo Chief, who I know very well. He has also been part of our US government, I don't want to use the word agency, US government program mentoring, and we have helped him raise both equity and non-dilutive line of credit as well. So Russ, welcome. Really excited to have you here. And today Russ is going to specifically share on how to build corporate partnerships and how such could turn into investments. So, Russ, why don't you give a brief background about yourself and also how your past experience led to you starting Cargo Chief?
That sounds great, Casey. Thank you very much. Welcome, everyone. This is a great opportunity. So my path, after going to school in Boston, came out to Silicon Valley, went to a company called AdaptTech. The stock went from 7 to 70 in my 5 years. I never sold a single share. I accumulated as much as I could through the ESPP and stock options. And after 5 years, accumulated a fair bit of stock, and the stock rose so much, I went in, thanked the CEO. He'd done a great job of steering the ship, jumped off and started my first company called Clearbox Communications that pioneered the market for headsets for mobile phones. We became the category leader, shipping millions of units. And that was, my friends and family around. The very first check was Uncle Fred for, I think, $2,000 or $5,000. That became a Band of Angels deal. At the end, it turned out nicely for the investors as well as the team. So one of my lessons that I learned was it was a great opportunity, and I sent a very thoughtful thank you note to the leader of the Band of Angels. And the Band of Angels leader was so touched, he actually read my personal email to him to the group of 100. And then out of that group of 100, many of them said, "Oh my gosh, what a great guy. I want to invest with him again." So I said, one of the lessons I learned was take advantage of any communication opportunity to build your brand as you go out. Then I started up a company called Sentinel Vision that pioneered the market for vision-based security systems. We were too early. The technology was very hard. We were basically ring before ring, and we tried to do it over phone lines, which was really hard and very expensive. Did get the product done, but we hit the crash of 07, and no one was getting funding for anything. I later learned that Box.net did their Series B and $8 million pre. I mean, that's ridiculous. Then I started up a company that pioneered the market for fire and freeze warning systems called FireEar. That did not work out. We had a founder issue. And then I remembered all the issues I had with my headsets. I remember one day I had a 30,000 unit order going to Motorola, and I couldn't get a truck. I can't be late to Motorola. They're super intense. I've spent a year trying to get this customer. I'll pay 3x the normal price to get a truck, so my shipment isn't late. And I couldn't get a truck. I was very frustrated. Then I had another instance where the buyer at Best Buy said, "Hey, Russ, your stuff is selling out really well. I'm going to have empty pegs this weekend," which is a no-no with my boss. This is the buyer at Best Buy. And he says, "I need to know where the truck is. Otherwise, I'm going to have to give your pegs to your competition because I can't have empty pegs in the store on a weekend." Very reasonable thing for a buyer to say. "Where's the truck?" I couldn't tell him. I was so frustrated. So I started Cargo Chief to solve the problems for small shippers. We innovated. We generated many patentable innovations for the way to manage trucking arrangements and shipping. And the company grew very quickly to tens of millions of dollars within just a few years. And then our other brokers started saying to us, "Hey, Cargo Chief, your multi-patent award-winning tech is better than anything else I could find. Would please license it?" And we said, "Oh my gosh, what a great opportunity to shift our business, not compete with 18,000 freight brokers that buy hundreds of billions of dollars of transactions, but to sell data and technology to freight brokers and help them accelerate their business." So we did that, and we'll probably get into more questions, but Casey, I'll stop there.
You answered the next question too. So that was very proactive, and you read my mind. That's great. That's expected of such successful entrepreneurs like you, Russ. Nothing less would suffice. Okay, give an example of a corporate partnership you forged for Cargo Chief.
Sure. So our latest investor is the CEO of the largest private trucking company called Estes. It has order magnitude $4 billion in revenue. He's a billionaire many times over. And we started working, he became aware of us. Actually, I saw his VP on a panel. I approached his VP, and his VP said, "Well, I like to invest in startups, and my boss, who owns the biggest trucking company, likes to invest in startups. We might be interested in taking a look at you." So I presented to them, and they said, well, this is kind of cool. Let me introduce you to some friends. And so we started networking, and then he started introducing us to factoring companies. These are companies that will buy an invoice from a trucking carrier for say $1,000, and then they'll give the trucking carrier $900. And then when the customer pays the factoring company, they'll give the trucking company $70 and retain $30 for their business. So we started partnering with the factoring firms that he had introduced us to, and he started to introducing us to more and more folks. He introduced us to his internal brokerage for his trucking company, an LTL trucking company, and then with all that benefit, and when it came time for us to do our round this year in 2021. He ended up leading the round and doing the majority of the investment.
That's great. And that also answers the next question we had. So I don't need to ask that. So I have two more questions. One is, to get to the next level of cargo chief, what kind of corporate partnerships are you seeking?
Sure. So thank you very much. So I think the kind of the walkaway lesson is for any entrepreneur, you have to be extremely outward focused. You need to network. You need to go to events like KC and Gary host all the time. These are networking events where you're going to meet people, and those people can turn into things. Most of the time, it doesn't turn into anything. You're going to have a low hit rate. But if you approach 100 people, you might get 4 or 5 things that turn into something that's interesting. And that's part of being a successful entrepreneur, is trying all these different things and seeing what works. In terms of what we're looking for going forward, we now have the most comprehensive database of trucking carrier preferences. We know better than anybody else which carriers want to go between what cities and what days and how often. So now we're looking for customers. We have brokerages that buy a lot of freight. We also have shippers. These are manufacturers or providers of goods, the things that would be sold at Safeway or sold at Best Buy, that are becoming customers. So we love those kind of partnerships. We have a very strong dev team, so I don't need any help with development, I don't think. And we're, at least for the moment, good on cash. So, and thank you, Casey, for your introduction to a bank that provided a very favorable corporate loan, as well as a lot of help on the PPP loans last year when things were tight, and go forward that way.
That's great. So we have one more question, but a couple of quick comments, because Russ always touches things even without him asked. So that is also part of Silicon Valley mindset. We went out of the way for you because you made yourself vulnerable. And person of your level, sometimes they are egoist and they'll try to show a formidable image, larger than life. But because you said, hey, if this doesn't happen, we may throw in the towel. I'm like, really? That cannot happen. And we really went out of our way. So that's also Silicon Valley mindset. And ask for help. That's not your image, won't take a beating, or your rate will only go up, because coachability is the number one factor for which people who should get funding don't get funding, because investors, before they write the check, would say, hey, this person is coachable or not. Right. So that's great. And many entrepreneurs are starting off, so they don't have the history and background as you have, Russ. So what's your message to them on approaching corporates?
So the key here when approaching corporate VCs is the corporate VC will bring the benefit of the corporation's channel or its resources, but probably most likely channel to you, but will take a long time to close. And most corporate VCs won't lead around. So you want to get a financial investor, maybe a strong angel group or VC, to kind of lead the round and then loop in the corporate VC. Now, what you can do is generate the interest from the corporate VC and then approach a financial investor, an angel group or a VC, and say, look I have interest from Tesla VC group. They want to be part of a round. Can you help put this together? That helps the financial investor, the VC or the angel group go, oh my gosh, demand is verified for this service or this offering. At a very high level, when you're pitching investors, the key is that you might get an hour meeting. You want maybe 10 to 15 slides and maybe 45 backup slides. It's a lot of work. In my experience, and I've led 25 rounds of investment, closed over 300 individual investor checks for early stage companies, is that your very first version of the deck, when you think it's great, that's version 1, it might be a B, maybe a B minus. And after 10 to 15 rounds, it will turn into an A plus. It takes a lot of time to raise money, right? It's out there. And you need to do all the normal things Casey and his team are going to advise you on to help you be ready to close investment.
That's fantastic, Russ. But some of this is also changing, and our lead presenter Andrew represents Tdk Ventures, which invests in early stage, and such companies are at the cutting edge of change. And somehow we see CVCs who has come to our events like Banco Santander and others, they are actually spinning off their funds into VC funds or angel funds and taking other investors so that they become more flexible outside the charter of their parent company. So some people are keeping the names also, like Illumina. They have been in our event and they have spun off, but they have kept the name and reputation of their parent company. So this is where real change is happening, and we hope collectively we can be the vortex of change. So on that note, Russ, thanks very much, and thanks for and maybe there can be some partnership with TDK or SK Group or other people you meet or someone Sharon knows. And
Sorry,
thanks for
Casey.
being.
Casey, can I chime in with another quick question for us?
Sure, of course.
Okay, great.
We
So
love those.
yes, when you were describing what you were talking about, sounds like is a full-time overtime job, just going after the right investors. How do you juggle the rest of the priorities, like getting sales for the company?
This is the trick, and the key is to be very efficient with your time, to be very organized, very thorough. Basically, when you're selling, the CEO is always selling. They're selling the concept to customers. They're selling the concept to early employees. They're selling the concept to the bank. They're selling it to investors as well. And you need to be well organized. You need to be thorough. Most investors are not going to chase you. You need to chase the investors. You need to be organized. And if it's not working with that investor, you need to move on. You have to be very practical. It's intense. For me, I'm fortunate. I don't need much sleep. I get 6 hours of sleep a night, no coffee. I'm good for 18 hours a day. I always make time for fun. So I'm not saying you should work all the time. If someone calls up and says, hey, do you want to go to a soccer game, or you want to go sailing, or you want to go for a run, say yes to that. Because part of being an entrepreneur is having incredible freedoms that hardly anyone has. I mean, just step back and think about what would it be like to start a company in inner China 100 years ago? Impossible, right? But now think about all the freedoms and all the tools. Being an entrepreneur today here in Silicon Valley, it's so much easier than where it was in other locations in other times. So be grateful for that, seize the opportunity, and become great and have a great life.
Thank you.
That's fantastic. And Russ, thanks again for acknowledging our contribution to helping you with that bank. And Sharon's question, also Russ built relationships with us and other people. And over the years, we became friends. So it's just not whoever is paying us to present. It is also about, okay, we want such people to be successful because we are also vested in them. So
that's the key thing, Casey. So part of the deal of being a great entrepreneur is building connections, building relationships. So wherever I go, I build relationships, I have connections, and I have friends from every stage of my life. That's how you become a successful entrepreneur.
That's great. Once again,
Beautiful.
Russ, thanks very much. Very illuminating presentation. And now we are going to invite our next presenter, our lead presenter. We have the brief background. This is a person. We were looking to start CVC thought leadership events, and we talked with several people, and then we built relationships over a year, and then finally it clicked. This is a person who is as sharp as it gets. He attended MIT and Wharton and was investor VC in China before he relocated back to Silicon Valley and helped start Tdk Ventures. And because Tdk Ventures and him invest in early stages and around the world, he just fits into Pitch Global's our culture totally. So it's my great pleasure and fortune to reintroduce Andrew Mawa of Tdk Ventures. He's been a speaker and presenter in Pitch Global, I would say 5-6 times over the last 1 year. So, all excited just to sit back and relax and hear Andrew's take on how to build partnerships with CVCs.
Hi, Casey. Thank you so much. Hi, everyone. Good morning. Let me share my screen. I hope you all can see that. Okay, very good. And I will begin. So today I'll be presenting my thoughts on how founders can build partnerships with CVCs. Here's a look at the agenda. Very short, very straightforward and to the point. First, I'll talk a little bit about Tdk Ventures, then dive into the material on building partnerships with CVCs, and then leave time at the end for Q&A. So a little bit about Tdk Ventures.
Sorry, Andrew. I think you're sharing a different screen because we're only seeing everyone's profiles.
Oh.
I can see a screen.
Really?
Yeah.
Okay.
Can KC, can you see my screen?
Oh, sorry. I do see it now. I apologize.
Okay. All right. So Tdk Ventures is a technology-focused VC fund. We have offices in San Jose and Boston, and we invest globally in seed and early stage startups that leverage innovation in fundamental material science. Launched in July of 2019, we're managing $200 million, and we invest globally. Here's a look at our core values. I want to emphasize the one in the lower left-hand corner, entrepreneurs first. We strive to really make entrepreneurs the stars of everything that we do. And so to that end, a lot of our efforts are about helping entrepreneurs bring their businesses to market and become very successful. A little bit about Tdk. It's a global corporation headquartered in Japan. And in the upper left-hand corner, you'll see a quote from the CEO, Ishiguro-san. Tdk is a company that exists for the purpose of contributing to society. And making real, meaningful contributions to society are very important for everyone at Tdk. Here's a look at our investment themes. I'm not going to read them, but each one gives us an opportunity to really look at how are innovations in these various spaces changing the world, and how can we collaborate with various startups to create value in these spaces. We strive to bring much more than just capital to every investment we make. In fact, for every investment, we're required to find value add beyond capital, and that we call Tdk goodness, and it's very important to everything that we do. Here's a look at our founding team. I'd like to call your attention to Mr. Paul Holland. He's our general partner in residence and formerly general partner at Foundation Capital, one of the premier Silicon Valley VC funds. Here are some of our portfolio companies. Each one is very special to us, and each one gives us an opportunity to help them be successful and to learn more about the spaces that they're in. And now I'll dive into the main material, how to build partnerships with CVCs. First, we have to understand what a CVC is. And the reality is CVCs are very different. And the general idea is CVC is just, it's an investment vehicle that is established to achieve one or more corporate aims. And these corporate aims could be of one of two different, or actually, I'll just say in general, it could take on many different flavors. And I've just bucketed those into either financial aims or strategic aims. But the thing to notice is that each CVC is different. Some potentially could have more financial aims or more strategic aims, depending on who you're talking to and the circumstances that the CVC was formed. But really, the business of a CVC is the same as almost any other institutional financial VC, is that you would make a small bet, you'd make an investment in an innovative startup, and then give access to some kind of opportunities to collaborate with the corporate. But I want to stress, some CVCs are more financial and others are more strategic. So understanding that perspective will go a long way to helping you and your startup, if you're a founder, become more successful in terms of building partnerships with that CVC. The reality is, for many startups, the top motive is really getting access to some kind of market. And in many cases, I would say almost all cases, the CVC represents a corporate that is much larger than the startup. And this allows that, or potentially could allow that startup to get access to different market opportunities that the larger corporate is already in. And to start, you really have to set the right foundation. This is critical. If you don't have the right foundation, trying to build partnerships here and there in the long run won't be effective. And how do you build this foundation? Well, it starts out by first sharing goals. You really want to understand what each party is working toward. And you really ultimately want to work toward a shared outcome, whatever that looks like. But that takes time. All the parties need to talk and share and create a shared vision. Next, identify areas where you have common ground, but also understand the areas where there are differences. And this is something that's often overlooked. In many cases, there are major differences between the way the startup sees the marketplace and the way the corporate sees the marketplace. And you have to understand that, and you have to work with it. It doesn't benefit you at all to just ignore it and say, well, we'll just sort of gloss over this. That won't help. And then once you identify those areas of common ground, find the right collaboration approach. Is it more just about how to approach the market? Is it more about the technology? Is it more about other aspects? It really is for the larger corporate and the startup to discuss and find the right methodology, the right tools to approach collaboration. Both of the parties, the corporate and the startup, bring different value to the table, and it's important to understand what that value is. And really, one thing that often gets overlooked is taking the time, you yourself if let's say, for example, you're the startup, is to identify what do you think are those areas of great value that you bring to the table. And also the same for the corporate. For the corporate, what are the great areas of value that you bring to the table as well? And acknowledge that, but then sort of put that forward as an area where you could contribute to a forthcoming partnership. One thing that often gets overlooked, there are many different layers for collaboration with corporates. And I had a conversation with a good friend who's at a corporate VC, and he acknowledged that there were some investments he made where they were building partnerships at all of these levels, partnerships on their tech products. It was helping to build better and better products. Also, alignment on their operations. They're helping them be more efficient at the work that they do. And even collaboration on their workforce. So this startup helped enhance their training programs for their workforce. And then also, along with their partnerships with their various vendors, the startup helped them improve the relationships with their vendors. So I want to stress there are a lot of different areas where one can find opportunities to collaborate, and both the startup and the corporate can add value across all of these different layers. And so broadly, I see 4 different stages of engagement. And this is very general. I didn't want to call out a specific type of partnership. I just want to say that in general, most partnerships sort of follow this to varying degrees. So first, it's about initial discussions, really getting to know each of the different teams. Stage 2, doing a little bit more due diligence, identifying project scope and different interest levels. Stage 3 is where oftentimes you'll see some kind of simple collaboration agreement, whether it's something that even doesn't require a document, but really working together on something basic to kind of understand more about all the different ways where both the corporate and the startup can collaborate. And then the last stage is where you walk into the world of full agreements. These are large, tend to be large documents, whether it's some kind of pilot or strategic partnership, JDA, joint venture, et cetera, et cetera, et cetera. Each of those really involves a lot of documentation and potentially training and spending time with the various teams to walk through what the partnership looks like. But through those discussions, there are several key points, and these need to be understood and addressed, I would say, as early as possible. So what is the scope of the partnership? You know, is it only for a certain geography? Is it global? Is it for certain products? You know, that needs to be well understood. What's the timeline? Is this just for a year or two? Is it for a short time span or something long term? What does the branding look like? What are the financial considerations? Are there payments? Are there no payments? Who makes those payments and when? Another super important one, how is IP managed? How is it licensed? Things like that are very important to talk about. Management authorization, when decisions need to be made, who makes those decisions? Reporting, timing, and responsibility. So as the partnership goes on, how do you record things? Who's responsible for things? How do you know how well this is doing? And lastly, terminating the relationship. What does that look like? Who can make those decisions, and under what circumstances can those decisions be made? So these are all important things, and it's important to discuss these upfront and have them documented as best as you can. And through the process, there are a lot of different risks to watch out for. And as I said earlier, you know, these are certain things that you just don't want to gloss over. You really want to understand and account for in the way you handle the partnership. So different cultures, you know, in some cases, the corporate may have a different culture than the startup. And we see this in many instances, and really understand how to work with that. It could be a benefit in some cases. Another major one is misalignment of incentives. And this really goes back to discussing what you're trying to achieve, getting everything out there on the table, and working through how to work effectively around the different incentives and perhaps create new ones. Different risk appetites, you know, perhaps the startup is willing to take on more risk, perhaps the corporate is willing to take on more risk. It just depends, and you really have to understand that. Other things like pace of work and different areas of maturity and different ideas about scaling can come into play, and really need to talk about that. But also this idea of reputational damage. You know, some people might say that for a startup, perhaps the brand is less well known. It could be more readily or more open to taking reputational damage, whereas in many cases, a larger, more well-established corporate may be less willing to take certain reputations. So thinking about how that plays in terms of how various partnerships are structured is important. And lastly, lost investment. How does that affect the relationship? And the potential is huge. I think it's really about bringing together strengths from corporates and startups and marrying them in such a way that value is consistently created for everybody in the ecosystem. But the key here is both parties should treat it as a real partnership. It's an opportunity to learn, embrace the differences, but create value together. And like any real partnership, I want to stress, you have to make the effort to build trust and mutual respect with every single interaction. And I've seen missed opportunities where trust building was not incorporated effectively, and eventually the deal falls apart. And this happens. But what I want to stress to you is, if you take the time and take various trust building measures, you can actually end up with something that's very, very powerful and can create a lot of value. Embracing differences, seeing strengths, seeing weaknesses, being supportive, enthusiastic, having management being committed to the relationship, and communicating as equal partners as much as possible. In some cases, it may not be possible, but as much as possible, understand different power dynamics and work together from more of a perspective of equality. And so I think that brings us to the end of my presentation. And now I'd like to open up to questions from the audience.
If you have a question, you can put it in the chat. And if your question is selected, we can unmute you. I do see a question from Lori asking if attendees will receive a copy of the slide presentation.
Yeah, that is something we can handle. That's not for Andrew probably, but yeah, I think we are videoing it. We can just send Lori the video recording of this instead of again having to dig out, ask Andrew for the slides. But I have a comment, and other presenters or speakers, Jerry or Hisak, feel free to ask questions too. And I mean, so I love the way you ended with trust, Andrew, because, you know, in the last 12, 13 years, ever since social media has exploded, you know, people talk about, you know, social capital, but actually trust is the basis of social capital. You know, there's a lot of very deep research has been done in anthropology and sociology. And I read this, I just forget the name of the person who wrote it, but he was hired by government of Italy to do a study on their anti-federalism, because, you know, about 20 years ago, Italy decided to give their, you know, states more power. And then after 10 years, they did this study saying what is the outcome. And the biggest outcome was that Northern Italy is like one of the most advanced places in the world, and Southern Italy is much backward compared to Northern Italy. And the basic difference is, in Northern Italy, there are clubs, associations, you know, there are ways to meet and mingle with each other and collaborate. And in Southern Italy, you know, that's where the mafia came from. You hired them to defend you from your neighbors. So just trust has created this level of disparity. So much trust has created the prosperity in Northern Italy as one of the top in the world, and distrust has created much less prosperity in Southern Italy. So trust definitely is very underrated. So I love that your final message today was trust. And can you just elaborate on it? Give some examples how companies can, you know, proactively create more trust, even if they don't have existing template to how to build it.
Yeah, certainly. I think that the number one thing I would stress with building trust is it's it's about the openness to engage with the various parties that you seek to work with, and it's about understanding their perspective. It's about hearing their voice. It's about spending time. And so in many cases, that means meeting up and having meals together. It means discussing things. It means sharing things beyond just the simple scope of the engagement. It could be talking about other perspectives, and getting to know the people on a personal level also helps as well. I think that just takes time, and it takes the desire to identify those areas of common ground and work through them. So, for example, some easy ways to do that are to meet for coffee, to meet for lunch, to I've in some cases, not in many cases, but in some cases, I've seen entrepreneur groups arrange hikes, and VCs tag along, and really the hike it's more focused on just spending time together and talking through life, not talking about deals. So there are a lot of ways to do it. Just get creative and really understand, really think through how to connect with the people. At the end of the day, it's all about people, and how do we connect with people on a more sort of closer level, and get to know each other, build trust that way.
That's great. Andrew, I have another question before that, a comment. We have one of our, past keynotes here. We were texting each other, and this is someone we respect a lot. His name is Sudhir Kadam, and he helped build IIT Startup's first cohort. He was the lead mentor, and IIT Startups, what they created, definitely he helped change Silicon Valley. So Sudhir, thank you for being there, and I'm sorry that you cannot see the video, or we cannot see you. This is the first time, so don't compare this event with UC Berkeley, because we are working with them for 4 years, and we have perfected the system with trial and error. So for the first event with SKCPR, they are very thorough and they want to be perfect. And for the first event, this is really good, but we will take your feedback and maybe get on a call with you to understand how we could do better. So Sudhir, appreciate you being in our event.
Oh yeah,
now,
we can definitely get him on video. Would you like him to ask a question?
Well, he has a call, but it's just that if I mentioned him, I'm really excited that this event, if we attract people like him, that means it's really successful event. So that's all right.
Okay.
We have a question from one of our entrepreneurs who we are also guiding, and this is the person who also believes in changing the world. And I love how people come up with solutions based on a practical problem, like Russ Jones did, why he started Cargo Chief, because he couldn't get his trucks to Best Buy on time. Now, this gentleman, Alexanian of Blissera, he was building home for his father in Armenia, and that's how he couldn't find any good elevator, and he came up with the idea of smart elevators. So he's someone I'm associated with, and he's invited me to be on his board, full disclosure. And so he just mentioned that he may want the slides or the videos. I think we will start with the video, and then go from there. And he asks, Andrew, in your presentation, you mentioned area of business for TDK. Are you looking into investments that are fully aligned with the area of TDK business, or could be different area, but aligned with your chairman's message?
Okay, it's a complex question. So here's how I'll answer it. Tdk Ventures invests in innovative technology companies that are disrupting. We're looking for disruptions that can create value 5 to 10 years out. So in many cases, these may not be directly related to existing TDK business, but we broadly want strategic alignment. So how does that look? Well, it's just a kind of subjective assessment. So it's all about really our view on the future and what could be innovative in the future. Less so about existing TDK products. In fact, intentionally, we try to look at startups that are innovating different technologies in different markets. So generally, that's what we seek out.
And couple of the questions are, a couple of our companies, they use Tdk sensors. I think it's more than two, at least 4 or 5 of them. And they have been saying it's very hard to get. Tdk sensors is so much in demand. Another company who Sharon is also involved with, and you saw them, Turing Sense, they started with Tdk sensors, but they moved to sourcing sensors from Italy because they just can't get a hold of them. So is there a way by which they can get into some special, I won't use the word favor, but is there any other initiative? Like I know Qualcomm Ventures, they have the Qualcomm Small Business Initiative, they have the Qualcomm Investments, they also have the DRX fund with Novartis. So does TDK also has a non-CVC arm which fosters partnership with companies they may or may not invest in?
I'm not aware of such a program. It might exist. It
Okay.
might not. That would be outside of my view.
Okay. And also, we have been interested in Japanese companies because we, in the past, did some work with Ricoh, help them spin off their non-core medtech business. And we have some experience. I know you quoted CVC head of Sony last time. Jen, I'm in touch with him too, very responsive over LinkedIn. Can you give us some perspective? We'd love to learn more because Japanese CVCs are a lot active. They are companies like Sony and all, they have changed the world. So can you give a broad view of Japanese CVCs in general and how to make partnerships with them, maybe Japanese focused?
So, I mean, like many other CVCs, every single CVC is different. So I'm going to state that right at the beginning. They're all very different. So I think just trying to make generalities, I think it may be a little bit challenging. I would say a few things. I think that in general, I am seeing more and more Japanese corporates form CVCs. So that's one thing I see that's in common. There is that desire to connect with the entrepreneurial community and to add value. And so many Japanese CVCs are seeking opportunities to partner with startups. And I think another thing I would say is very common to many CVCs from Japan is the desire to make real, or to allow for real connections to add value between the startup and potentially markets in Japan. I think that's one area that I think a lot of startups look for, and it's also an area that a lot of the CVCs from Japan also look for and are very open for. So I think those are some areas that are very common. And in addition to that, I would say just the desire, I'm starting to see now more and more Japanese CVCs look more towards having a global footprint. So it's not just about investing only in Japanese companies or only US companies or whatever country you can pick. It is probably moving towards more of a global footprint. So that would be what I would say.
That's great. I've seen recently Toyota and others, they have spun off part of their CVC arm and all, so that they want to have a larger impact outside their parent company's charter. So we can take one more question. I think Lori wanted to ask a question. Please type it if it's relevant to this topic on how to build relationships with CVCs. We'll answer it, but just type it. And I love spontaneity, and someone said, typed out 13 ways to build trust. I think I will read that out because I appreciate positive participation. And trust is very a secret sauce in today's conversation, for lack of a better word. So Alicia Manis, she says 13 ways of to build trust is: one, talk straight; two, demonstrate respect; three, create transparencies; four, right wrongs; five, show loyalty behavior; six, deliver results; seven, get better; eight, confront reality; nine, clarify expectations; 10, practice accountability; 11, listen first behavior; 12, keep commitments; 13, extend trust. I think this is really good. Erin, why don't you just, take a copy of this? And yeah, so sorry, she's saying, Lori is saying her question is really long, and once again, we are not set up. We have to, after we brainstorm, we are gonna improve the process. So we got it.
Casey, she can be unmuted easily.
Yeah.
Okay.
If you like her
All
to
right.
ask the
All
question.
right, let's do that for one person.
Okay,
Okay.
Lori, I'm going to ask you to unmute.
Okay, great. Can you hear me?
Yep.
Can you? Okay, great. Yeah, thank you very much. And I'd like to thank the panel for offering this this pitch. This is our first time on it. I'm a member of the United States Black Chamber of Commerce. We're trying to get more minorities involved in VCs. And one of the problems that we have, and this is the reason why I indicated that my question was too long, is that we have a problem with asking VCs to invest, because what about the protection of the IPs? How do we protect our IPs? Because a lot of minorities, they may not have the money to go and register or register their ideas with the United States Patent and Trademark Office. So what do you do to protect people, especially people that don't have a lot of money? Because people that have more money, they can go and, of course, register theirs and license it and patent it and so forth. What do you do? What type of protection? Do you sign a non-disclosure agreement? How does that work to encourage people that they can bring forth their information and share it with you, so that they can strategically align with VCs like yourself?
Well, I have to take this question because this is slightly outside the charter of partnerships, and we will talk to you later. Can you email us if you don't mind, startups@Pitch Global, and we will, this question, if we have to start answering this question, we'll run out of time, unfortunately. But Lori, we really appreciate, and in today, we made an exception for you. So please don't hold it against us that we are not answering it, because we have run out of time for this period. So please email us at startups@pitchglobal.com. And maybe Jerry, when Jerry is such an expert, and maybe when he is doing the chat with Hisuk Jung, maybe he can answer it a little bit also, because he's an expert in. I'll just introduce him. So Andrew, once again, thanks very much for such an illuminating presentation. Looking forward to more future ones. I know we have companies, Europeans' largest insurance company lined up. We have one of the top, industrial companies lined up, CVCs from a lot of these companies. And we are going to make this CVC Thought Leadership series the best in the world. And, today, whoever is participating, this is a shared experience, and really excited about everything. So Andrew, thank you very much, and for opening up our eyes, in this area. And now please stay a bit, because we need to hear Hisuk Jung and Jerry's chat. So now I'm going to introduce this is the last part of our event, which is our guest CVC. Hisuk Jung would be interviewed by Jerry Baranano, who is our new entrepreneur in residence, focused on CVCs. Let me give background of both the people. I'll start with Jerry first. And Jerry is as connected as anyone and has deep understanding of Silicon Valley ecosystem. He started US government funded program, Tech Futures Group, uh, part of NorCal SBDC, state of California. And he built this agency up to be a force. And during the pandemic, he retired and moved to the East Coast. And a few years ago, he picked Pitch Global to become a satellite of this program. And it got us to the next level. So he's been an amazing mentor. In his past life, he has been involved in large exits. And he also is attended Stanford Business School and someone who understands very broad range of problems startup face, from US government grants to anything, basically. And today he's going to interview Hee Suk Jung from SK Group and SK Gas. And Hee Suk Jung has been involved in some of their big investments, including $1.5 billion investment in Plug Power in New York earlier this year. So this part also, please stay everybody, is going to be a tremendous learning experience. So Jerry, I hand over the floor to you.
Thank you very much. Andrew, thank you for your presentation. Casey, thanks for running this. And then, hello, Hee Young. Do you want to do a quick intro yourself, or are you satisfied with what Casey said?
No, I give a brief introduction. Well, thank you for having me again. I don't know if I'm the right person to talk about all the CVC investments or the relationships, but I would actually thank Andrew, because he said all the right things and he actually stole some of my thunders. So I have to echo whatever he said before, but please bear with me. My name is Hee. I work out of Silicon Valley, leading the investment arm of SK Gas. And we focus our investment into energy, clean tech, climate tech. We also look into construction tech and bioscience. And we are trying to basically connect the dots between our business units with the startup technology. And we are just like any other CVCs, working for strategic gain and also the financial gain. I'm glad to be here. I look forward to the discussions and Q&A sessions with you, Jerry. And hopefully people will be more interactive, asking questions. And I will try my best to give my answers to have you better understand how to work with CVCs and what to look for it or what not to look for. And Andrew, I might just throw a curveball to you. It could be an interactive session where if you are feeling comfortable, you can always join the Q&A session, because it sounded like, you know, you'll be able to add a lot of values because some of the questions were actually being covered by you already in your presentation. So yeah, feel free to jump in if you're feeling okay with it.
Let me echo that as well. Please, Andrew, if you'd like, just unmute yourself and just chime in.
Yeah, I mean, you know, I wasn't going to do this, but, you know, after listening to your presentation, you know, you might as well just join the conversation. So
Sounds good. Thanks.
Please do. So let me just start real quick. So both of you, both Andrew and Hee, are obviously an Asian company, CVC. And for you and you as well, Andrew, if you'd like, what are the differences between a US-based, a European-based, and an Asian-based CVC? And how does that affect the way you might approach them and the way you might need to work with them?
Sure. And just to be clear, for every question, I will go first, and I will give Andrew a little bit of time to think about the answers or whether he wants to chip in or not. You know, so feel free, no pressure. So from that perspective, I have to say for US and European-based startups, when you are trying to work with Asian CVCs, that means you're getting ready for the geographic expansion into different countries. So basically, the biggest difference is, are you ready to expand your business into Asian countries? And what is the difference between Asian CVC and the other US or European CVCs? Not very much different, but of course, the geographic is different. and government relations are different, policies are different. And some of the electricity markets in Asia, it's still regulated by the government. So whole economies or the business schematic will be very different from US and European markets. So the CVCs are ready to walk with you to get you to that different market and really be able to solve some of the roadblocks or the problems that you may face getting into Asian countries. And one of the difference that Asian CVCs have is they tend to ask for exclusivity or the first right of refusal for doing business in their countries. And it could be very normal to be expected when you're working with big CVCs like SK, because we are very sensitive about making sure that your technology can work with our platform. So it's not absolute necessary that we get that right of first refusal or having the exclusivity, but as we build more trust, we will actually be requiring that kind of a relationship so that we can really be able to lock down on the domestic business and be able to take you to the other international countries. And another difference will be, like Andrew mentioned, there will be many visits and meetings that will take between the Asian VCs or CVCs or other Asian investor firms. And there could be a little bit of language barriers too. But of course, these days, more and more Asian companies have more English-speaking representatives working in Silicon Valley or in different areas like myself. And there is no more big barriers in terms of cultural difference, but it does play into it. Like when you are starting to bond with the management of Asian CVCs, the relationship really takes a big part. I can't even put a bigger point on it because it is really coming into the play where if you have a good relationship and the trust built in, then a lot of the problems can go away. So I would definitely say that the cultural difference is there. But if you are able to overcome that, I think the real value will be there to be able to work with the Asian CVCs.
Andrew, do you want to?
Yeah, I completely 100% agree with he. Culture I've seen is probably one of the most important areas in terms of building those relationships, building trust. And I would say that for many, I'll just speak in terms of my own experience. In many of the cases where we have, let's call them overseas startups or Western startups that want to or interested in entering markets in Asia, I have seen startups that go out of their way to learn more about that Asian culture. In fact, some have gone the distance of hiring a special consultant to help them understand this is what's customary, this is what you should expect, this is how you should respond, this is what you should prepare. And the ones that pay attention to that are the ones that tend to do better than the others. I've just seen it. I've seen cases where some startups walk in, and I was an investor in China for a number of years, and I've seen it. Startups come in, they made no effort to understand the culture. We're at a dinner, and I'm not going to go into the gory details, but it didn't work out. Mm-hmm. And there was a misunderstanding of what something meant, you know, and because of that, it just led to lots of mistrust and things just went south very quickly. So I want to emphasize, take the time to understand the culture. In fact, you know, you don't necessarily have to hire a consultant. I mean, I would recommend that if you have the resources. If you don't, you could potentially find someone who's familiar with that culture or is familiar with business in that region to help coach you a little bit. Find someone you can trust and who can talk to you on a, just straight up level, say, hey, this is what you should prepare. This is what happens. This is how you should respond. This is what's considered polite. This is what's not considered polite. And the more you understand that and the more you're able to and willing to move in that direction, the more it will speak to the folks from that culture. Hey, these are people that we want to spend time, get to know better.
Yeah, and one more thing, actually, I am starting to see more accelerators who have Asian-based companies as their member or their LPs. They start to give those tips and educational sessions to the startups that they work with. so that they know how to properly engage with the Asian companies. It's a very helpful sessions, but of course, it takes time. Nothing is easy. Nothing comes on a first day. But as they gradually learn more about different cultures, it actually helps the trusting and bonding relationship much faster and better.
So let me just follow up on that in terms of the speed of developing trust. I think there's perhaps, and you can talk to this, is there a misperception in terms of how long that takes and how you can accelerate it? Maybe you can talk a little bit about your experience with developing trust, how long it takes, what works, that kind of thing.
Yeah, I saw that 13 things from Alicia's chatting, which was a quote from a book. Everything is right, but I guess you don't know until you meet that person and start working together how to build a trust. Or, you know, everybody is different. I mean, like, you know, just because I'm from Korea, not all Koreans react the same way, because it depends on their characteristics or their personality. So if you start to work with somebody in real life, like, you know, really starting a due diligence process, or you guys are starting to have more serious discussions about investment or project financing, or actually doing a project together, that's the best way to build a relationship. And that's how you start to build the trust. And while you're doing that, of course, you know, with the given situation these days, it's very hard to meet in person, but meeting in person is the most crucial way. Most of my portfolio companies, they've actually been to Korea. I invited them over to Korea. I have them meet with our management, because all the CVCs, not one person can make all the decisions. It's not just going to be me making the decision. I have to get the buy-in from the other management people, and the R&D and engineering team will have to get the blessing from their CTO. I have to get the blessing from the CEO and other IC committee members. And so if I invite those companies over to Korea and I actually show them our project sites, hey, this is where we are thinking of putting your units in. You know, these are our R&D team members, and you know, you can also meet with our management. And that way we can actually build a trust in a very, very good way. And I also have them meet with government. You know, I also tell them, you know, hey, government, you know, if you're looking for this kind of technology, we're making an investment into this company. And if you need someone like this, then let us know. We will connect you with this company. And we are trying to build this collaborative relationship. And we are being very transparent. We will open up our business plan and how we are trying to work with you. And we even tell them if there will be any change in management. It's very important for the startups to understand if there's going to be a change in management, because if the management changes, everything changes. Your investment focus, the CVC units, their investment focus, or they might not even be able to make follow-on investments because of the change in the management. So you have to be looking out for those kind of changes coming for those CVCs, and see if it's the really good partner that you can work with. And by going through these different steps and really understanding each other, we'll really build a good bonding between the management. And that way we can get over certain hurdles and roadblocks that will come in the fourth way a lot easier and faster. And we've done that before with, you know, many other companies that we've invested, like, you know, Bloom Energy or Plug Power going on right now, or Sunrun, or, you know, other big companies that we are actually working on right now.
Yeah, I'll echo those comments. Totally 100% agree. I think what I would add is so for one, think about taking baby steps. You might have in your mind the view of here's eventually where we want to be, but I would say in many cases, you may want to take smaller steps and move toward that. I'll shed some light on a particular situation that it didn't directly involve Tdk Ventures. It was two different companies, but it was a similar situation in which a smaller startup wanted to partner with a larger corporate. And in that case, what I found was they decided to start with very small, more basic trust building measures, just in terms of meeting and talking, not in terms of focusing on that big goal, which is what they really wanted. But first, let's figure out how to meet together. Then let's figure out how to do maybe a smaller pilot or things like that. And what I found was I was on calls with each of the parties before every meeting figuring out what's going on. And after every meeting, essentially, helping people, really understood what just happened. And it was good. And the reason is because there was information flowing back and forth. So people, when something, you experience something, you want to understand that both parties are seeing it in similar ways. What you don't want to have happen is one party thinks A and the other party thinks B. You get misalignment and things can go out of control. But what I found is what tends to help is if you have a designated point of contact for both the corporate and the startup, where they're open and they're comfortable sharing information back and forth on a more a sort of a little bit lower level, in the sense that they're willing to share a little bit more. I mean, the more you can share and the more you're comfortable with that, the better. Because then, for example, if there is a large management change at the corporate, that point of contact can say, hey, just want to let you know something that may be coming. Here's some things to think about. Here's some things that you may want to keep in mind, et cetera, et cetera, et cetera. I think that goes a long way in terms of strengthening that relationship and helping it maintain that strong partnership over the long haul.
Okay, so let me refer back to Andrew's one of Andrew's charts, which was the timeline, where he talked about starting with introductory discussions, due diligence, small project, big project. What's the timeline on that?
I think it really depends because usually when CVC is looking at a company for possible investment, it usually takes 8 weeks would be very, very challenging. So I think we're looking at 12 to 16 weeks. And when you start to look at the project, there's two different trenches. One is, are we considering investment only, or are we considering project only, or are we considering both of them? And the project may take a little bit more time because you will start to work with the actual working level people for the execution. But when it's getting into investment, maybe that's a good starting point by being considered as a company who will be able to invest into the startup. So the timeline will be investment, normally 3 to 4 months timeline. And for projects, it'll take a little bit more time than that. But usually what we do is we make investment first, and then we will start to discuss a project together, because we want to be able to gain the trust first, because that IP issue that Lori talked about always comes in the way. And eventually startup wants to do business in different continents or different countries, and they're being very protective of their IPs, which we completely understand. But after we make an investment, and us being a shareholder, they also gain that trust from themselves that, hey, SK invested and they're trying to do something good for us, so that it's easier for us to exchange information and start doing a project. So for us, not for every CVCs, but for us, we actually want to make an investment first, and then we'll start talking about the project. And projects, depending on the size of the project, like you mentioned, Jerry, it'll take a little bit of more time than usual investment cycle, but yeah, we will get there.
Andrew?
Nothing more to add. Just it just depends on the particular situation. Yeah, if there is project engagement, then yeah, they'll typically add more time to scope it out, to see where all the parameters and things like that. The investment in many cases can tend to happen a little bit faster, but depending on the CVC, they may suggest both or one or the other. So.
Yep. Oh, actually, just to add, 3 to 4 months will be if I were a participant investor. But if I'm leading a deal, then I will take about 6 months, because we are really thinking about the end picture. Like not just the investment of this round, but the follow-on investment. And what if the company has a difficult times? Are we ready to acquire this company? Or how much more do you want to invest so that we can really help them grow into bigger market? So we really look at the end picture when we are leading the deal. And that takes actually more time than just being a participant investor, of course.
Okay, that makes sense. Okay, so let me, you all talked about sort of, you didn't use this term, but red flags, where there's a change in management, then everything's sort of up in the air for a while. What are the red flags that you look for when you're looking to invest, and then after you've invested, and maybe you've got a project going? What are the red flags that you look for in terms of the investment you made, the startup, and then try to put yourself in the startup's shoes and say, what are the sort of red flags you would look for if you joined a startup that had gotten a CVC investment?
Sure. So from a CVC head, I'm wearing my CVC head. I'm looking at a startup, and what is a red flag for me? They need to be open for localizing, or if it's a hardware company, they need to be ready for being able to localize some of their portion of their hardwares. Because when you get into different countries and start doing business, the government will be asking for local content. So if everything needs to be made from US, it's not going to work out very well for other countries. So some of the BOP, like balance of plants or any other hardware associated with it, needs to be somehow be localized so that you can give some of the markets back to the country that you are moving into. So that is one thing that we are always checking before we get into any deals. If they're open to getting into different countries, and are they ready for localizing some of their contents? Either it's a product or service. And another point that I always look for is, do they have enough experience? And also, are they going to be able to work with the corporate culture that we have? And their goal and our goal, are they matching? Like, what is their target market? Are they targeting at C&I market, commercial and industrial market, or are they targeting at just the residential market? Or like, what kind of product roadmap do they have? Like, they all need to match. Otherwise, it's a no-go for us, because we are a strategic investor. If we were a financial investor, that wouldn't weigh as much, because if it's a good company and we can get the financial gain back, then that's not going to hold us back too much. But as a CVC, the strategic point has to match first, and then we can move on to the other stuff. But from the startup's perspective, everything that I said just now, also the CVCs need to have that. For example, if you are a early stage startup and you are working at a lab scale and you want to get to the pilot stage, can this CVC work with us for co-R&D, co-engineering? How can they help us? Do they have an experience like this, getting the lab scale technology into pilot scale? Or can they help us when we do the commercialization of the product? Which market are they trying to get into? Is it the market that we also want to get into? And are we trying to have this kind of relationship with them? And is it going to be more complex when we start to expand into different geographies? Meaning, if a startup is working with SK, and SK is only looking at Korean market, then they will need to have several other CVCs covering different parts of the countries. But if SK is ready to do business in 30 different countries, maybe you just need to have a very good relationship with SK only. So you also need to look at those target markets and how you are trying to be a good partner for long term. So for startups, please do look out for those kind of important factors, and also meet with the management, not just a CVC person in charge, but also try to meet with the other management members of the CVC, like CTOs or CEOs. It always helps you to understand if it's a good company to work with. And big names are not the best names to work with all the time. It may not be the most beautiful company is the best partner for you. It's not that case. So you really have to dig in, study, and really find the right partner for you. And that's the best way to work with a CVC.
I completely agree. He really said it best. And I'll add a few things. From the CVC point of view, some red flags for me, a lot of red flags stem from team. For example, the team is perhaps not mature, or perhaps the team is not as experienced. And so what we see, that tends to result in things like not good corporate governance. That's a big red flag. Or situations where their IP is not adequately protected or well defined. That's a huge red flag. I've seen cases where they have limited forecasting. That can be a huge red flag, or especially if that forecasting is based on things that are not as well defined, then it's harder to really get a sense for how fast this business may grow. And on the flip side, as a startup or as a founder, some red flags that I would look for are, is the CVC or the corporate or the combination of both willing to add real meaningful value? And this is important because I remember a meeting, this was a while ago, where we were meeting with a startup, and the startup asked for some specific help with something. We said, well, you already have so-and-so on your cap table. Can't they help you with this? And they said, no, that investor only brings money. And don't get me wrong, money is important. Capital is very, very important, but it's not the only thing. I would suggest for founders to look for areas where the corporate or the CVC can add value beyond that. It could be, and in my presentation, I said all the different layers. It could be helping your workforce. It could be helping operations. There are many different ways, but I think that identifying a corporate that can add value just beyond capital is important.
Yeah, that's very, very important. And just to make sure, from the startup's perspective, do the back checking of those CVCs if they're making good follow-on investments, because not getting follow-on investment from a big corporate name can really hurt you. So it means a lot of things, and it portrays a lot of things. So make sure that you are trying to work with a CVC who's good at making that follow-on investment. And hopefully they will not turn their back on you when you're having a difficult times. And sometimes CVC may not be the best for just invest as an investor perspective. They could be a better customer than just an investor. So don't always think about CVC as an investor, but also think of them as a customer, because they can play a different role if they're a customer rather than an investor. So I'm always trying to warn those startups getting ready to work with CVCs, and you really have to look at them from the different dynamics and perspectives to find the right partner for you.
So in terms of the relationship between the startup and the CVC, is it possible for the CEO to relegate that relationship to another person in the organization, or is that pretty much the CEO's responsibility?
When you say startup CEO, I think I think it comes in various steps, and I don't think it's just going to be CEO. I always try to match our CEO with a startup CEO, and the startup CTO with our CTO. They have different subjects to discuss, and they definitely have different views. And sometimes CEO wasn't a big fan of this startup, but CTO was amazed with their technology, and it works. So matching up the team members is always the best way to go about it. And of course, I've seen many startups having not so fancy technology, but great team, then they make this startup successful. So having those good team members and matching with our management is always a good thing to do. And the CEOs can always have different topics of discussion. They always look at it from the broader perspective and broader spectrum of businesses, and they always think about the future, how to connect the dots and really be able to discover and create markets. So I think that matching is something that I really need to do at the beginning stage, so that there's a better understanding of each other.
So I guess what I'm hearing you say is you can have several champions within the organization. It could be a CTO champion, it could be a CEO champion, which of course would be great. But I suspect it could also be a marketing product champion as well.
Yes, I try to help them, or help the startups with engineering portion of it, which is technology. I also try to help them with the marketing part of our company, and also the management who can really be the thought leaders and looking at the forthcoming future markets. And myself as a CVC leading the investment arm, I coordinated and I try to orchestrate all these efforts so that these two companies between the gigantic corporation and a startup who has a core technology can marry, and really the marriage will be happy. So it's really hard to get into bed with CVC, but once you get into bed with CVC, we will become very sticky. So we try to bring the values to the startups, and startups also need to understand, because previous board members of the startup often become very protective of their company and the IPs, which I completely understand. But as the time goes by, if they start to better understand where CVCs are coming from, then they get to be more open about their technology, and we can really think about how to expand their markets rather than them always being suspicious about, hey, the CVC might steal our technology. It's not where we come from. We don't even have the capability of stealing your technology, because we don't, why would we come to you if we had the capability of building something like yours? So they need to understand that, and to make them understand that it takes time. And that's why Andrew mentioned about trust. Yeah, it's something that we cannot write on the document. It's a person-to-person business, and we have to experience it.
Andrew, same questions to you. I just wanted to do a quick follow-up with but is there in your organization, is there a requirement to work with the CEO or the CTO, or how does that work?
There are no requirements, and it's exactly like he said. It's just finding the right levels that work, and that's just, you just have to. It's very situational.
Yep.
So yeah, it's about finding what works.
Okay. When you're making a decision, put yourself on the shoes of a startup. When you're making a decision to research what kind of CVC, who are the ones you would just say, hey, this isn't really quite a fit? Who not to work with? How do you make that decision?
Who not to work with?
Yeah.
I think first of all, as a startup, you need to know who you are looking for first, okay, to be able to make the decision of who not to work with. So again, it goes back to the technology fit, which is a strategic fit of the startups, the CVCs. So you have a technology, and you need to find a person who can build your business bigger. So that's the first cut. Who are the strategic fits that you can best work with? And then you got to take a look at the market. Like, do I want to go into this market? Maybe this company has a very good strategic fit with your technology, but they're getting into some countries that you're not interested in. And as an earlier stage companies, it's not best always thinking about international market. If you're a very, very early stage company, try to win it in your backyard first. If you're a company from US, I would try to win US market first. And then you can start to think about the international market, because eventually the CVCs will be asking for the use cases and reference lists and what kind of customers do you have, and they will try to dig into your revenue streams. But at the end of the day, when you are trying to get into certain market, that CVC needs to be a big enough player in that market so they can get you there. And another thing is, of course, the team members. Are they easy to work with? And when it's getting into the difficult situations, is it somebody that you can talk to and kind of resolve those issues? And those IPs and all that kind of the right of first refusal and exclusivity issues, we often use a tool, site letter, and we put that onto the site letter rather than term sheet, because site letter only applies to us rather than term sheet applies to the all other participant investors. You can utilize a site letter to protect your IP even more than just NDA says. So you can build up those kind of site letter, have all those terms and conditions in there, so that even though this company wasn't the best company for you to work with, you can actually resolve a lot of issues by working with a site letter and getting those terms agreed. So if they're not willing to talk about all these options and being able to work, and the attitude is not there, those are the people that you don't want to work with.
Andrew?
Completely agree with he. I think it's really about knowing what stage you're in and what's important to you, and just effectively communicating that. I've met with startups that tell me right off the bat they're only willing to work with corporates simply because they do want to make more commercial traction, and they don't see financial VCs as helping them do that really effectively to their liking. I've seen the opposite. I've seen some startups say, well, our business is very capital intensive. We want to build up strong relationships with financial investors. You know, it really runs the gamut. So I think, you know, from the startup's point of view, understanding their needs and what phase there are, what phase they're at, you know, as the startup grows and their needs change, their understanding and their sort of need for CVCs can change, and being able to understand that and articulate that is very important. But really, I think it comes down to something that he said earlier. It's you know, just even by researching, there's no way to really know. You do definitely do your research. I'm not saying don't do your research. Do your research. Find out where those CVCs are investing and how they're adding value, things like that. But it really isn't getting to know them, and in building that relationship, you'll get a sense for, is this a fit or not?
Yeah, I think not knowing enough will make you make mistakes. So really try to get to know different people, and just by researching or Googling, you don't get that information. So you really have to have some more meetings, and don't be so blunt, you know, in the first meeting, like, you know, we already have enough, we just closed our Series B, we have enough money, so we are not looking for money, you can be our customer. I've seen different startups, like I tell them our business plan and this is what we are trying to do, and they at the end of the meeting, they ask us if we could invest right now. So don't be so blunt, or you know, just try to understand where they come from. And if as you listen more, you will get to find out more, and you'll have better understanding of those CVCs, where they're coming from, and you can get into the better partnership. Or on the other hand, you know, don't be so blunt about we are only looking for customers, or don't be so blunt about we are only looking for money. You know, it can work both ways. Working with a CVC, and the beauty of working with CVC is that they have money, and they also have the project financing. They can work with you for core R&D or core engineering, and they can also take you to commercialization in different markets. So work with that, try to work with different options, and don't be so blunt about what you're looking for. That may not be everything.
That's great. We have coming to an end of this event. So I'm gonna just jump in and make one comment and ask one last question. So the comment is, Andrew and I, yesterday we were talking about what to have future topics for future CVC panel discussions. And Andrew, today's fireside chat, which got hijacked into this panel, is tremendous new topics. I love it. What Andrew talked about, you know, forecasting improperly, or you talked about, you know, maybe it's a wrong CVC, because if you get the wrong person in, next time they won't invest. I mean, I'm just going to look at this video and pick 5 new topics I learned. So one last question to all 3 of you. This is the quick fire round. You know, you briefly mentioned government. You know, what we are doing also, CVC thought leadership is very broad. It also is influenced by government and policy and, you know, things like that. So I just want to hear all 3 of yours independent opinion. It's not a discussion. What would your advice be on startups to navigate with governments? Maybe Jerry, he's more specialized in US government grants and all. He can give his 2-minute perspective. And then Andrew can end. So we just want to hear your take on navigating with governments for founders.
Yeah, so navigating with the US government is a hugely complex thing. So it really helps if you have someone who can be there, who's done it before, who knows how to do it. One way of starting a relationship is to get one of those SBIR grants, Small Business Innovation Research grants, which will put you in relation with an agency, and some of the agencies will buy from you. So once they have the SBIR grant, you have the SBIR grant, you performed well, they can then help you get into their purchasing. So that's one sort of easier way of doing it. The other is just to go to places who can help you with figuring out how to contract with the US government. Tech Futures Group can help with that. There's some other groups at SBDC who do that as well. No, not just in California or in the Bay Area, but nationwide.
That's great. He?
Yep, I'm gonna speak from the US or European startups perspective, trying to get into Korean market. Make them come to you. Don't go to them. It takes too long, it's too difficult, or work with other corporation companies or the investors to get into government's structure, because if you're trying to do it by yourself, it's just gonna be dragging, and it's just gonna take too much time. It's a waste of time. I think it'll be best if you work with other private companies to get to government functions. It works way faster, works more efficient. And if you are starting to be shining within your industry, they will come to you.
Great. Andrew, last comment.
Yeah, I think that for some startups, legal and regulatory is critical, especially if you're dealing with some technologies that perhaps may be deemed sensitive. It depends on where you are, but I think understanding the legal and regulatory implications are huge. And I actually have, in some cases, recommended that startups look globally. So there's look at what's happening in a local region, look at what's happening in a national, and then look what's happening globally. And having that perspective will then inform you who you need to be in contact with to get more details on how to navigate that. I think that's important.
Mm-hmm.
That's great. So we will, end on time. And as a closing remark, I have to thank everybody who took part. This has been a real peak experience for all of us in terms of knowledge. That's the elixir which, sages, which people throughout eternity of time has seeked. They want that spiritual high. And today it kind of feels like that. And everyone's together. We have co-created such an unique experience. And our vision, what CNN is, breaking news. You don't have to wait 24 hours for the news cycle. This is breaking education. You don't have to wait 3 years for something to become a syllabus, and, I'm just awed by the collective experience we have created this morning. So thank you all. And thanks, Sharon. And thanks, everyone, all participants. So I declare this closed, unless, Sharon, you have anything else to say.
Oh, good. Thank you.
Welcome. All right.
Thank you.
Welcome. Bye-bye.
Thank you.